Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. Welcome to the 2026 tax season pre-launch video. In today's video, we are going to cover one important tax deadline that occurs before the channel's official 2026 launch, which will occur next Saturday, January 17th, 2026. We are also going to cover a few housekeeping items related to the personal tax planning template. So let's jump right in, starting with Q4 2025 estimated tax payments, which are due by January the 15th, 2026. Now, in order to determine if you need to make a Q4 estimated tax payment, you should be using the Safe Harbor Method calculator, which is included with the personal tax planning template program. To locate the Safe Harbor Method calculator, go into the What's New section of the course and look for the following download right here, the Safe Harbor Method calculator download, as well as the How to Use the Safe Harbor Method calculator video training. Now, once you download the Number Crunch Nerds Safe Harbor Estimated Tax Calculator, this is what it's going to look like right here, and let's do a quick run through of the data entry fields, which are colored in green, as a quick refresher on where you're going to gather all of the necessary information to input into the calculator. So starting right here with the yellow colored arrows, we have the prior year AGI. We also have the prior year total tax right here. And then over in this section, we have the prior year overpayment applied to the current year. All three of those items that are marked with the yellow arrow will be found on your prior year tax return. If you are calculating the Q4 estimate for 2025, then the prior year tax return will be for 2024. Now coming right down here to the orange colored arrow, where are you going to get your projected withholding for the current year being 2025 in this example? Well, for this one, you're going to have to come up with a reasonable estimate based on your withholding from your W-2s, for example. You can also have withholding on various 1099s, for example, if you did a Roth IRA conversion in 2025 and you had the broker do some withholding on your behalf, the amount of withholding would appear on the 1099-R that you are going to receive in January of 2026 with respect to that transaction. So to summarize, the projected amount that you will put in here for 2025 withholding will be the sum of all your various withholding items that you are expecting. Okay, now coming down here to this section with the items marked with a purple arrow. This is the section where for Q1 through Q3 you typed in the actual estimated tax payments that you made. So these three numbers right here are going to be actuals, not estimates. If you don't recall the amounts that you paid for Q1 through Q3, if any, now would be the time to go back and check your bank records or check your individual account at irs.gov so you can identify exactly how much was paid in each of the first 3 quarters, and we will need to know that information in order to appropriately determine the payment for Q4 if there is one at all. Now finally, over here with the red arrow, this is the current year's projection of total tax. Where does this number come from, this $65,042 in this example? Well, it's going to come from right here, the personal tax planning template. We're going to go to the 2025 column right here, and then we're going to go all the way down to the bottom of the planner, and we're going to look right here on this line. This is the total tax projection for 2025. You can see we have $65,042, and that is where the $65,042 that we enter on the Safe Harbor Method calculator comes from. Now, if you have been in the personal tax planning template program for a while and you have filled out your 2024 column to agree with your as-filed tax return, then I would expect right down here in this section the total AGI 328,149 as well as the total tax 58,052 to agree to the first 2 inputs that we just talked about inside of the Safe Harbor Method calculator. There's the AGI of 328,149, and there's the total tax of 58,052. Both of those numbers are for 2024 in this example. Now let's take a moment to go over where you should be with respect to your 2025 estimate inside of the personal tax planning template. As of today, as of the making of this video, we are now in January of 2026. The 2025 tax year is over, and while I understand that in the early part of January you have likely not received all of your tax forms, for example your W-2s, your 1099s, all of the other annual forms that the various institutions with which you conduct business are supposed to send you, the 2025 tax year is still over, and if you are doing appropriate planning, you should have a pretty good idea at this point what your projections of both AGI and total tax are going to look like. Now again, I will grant you that the amount shown in this column may still be an estimate. It's not going to be perfect. You haven't received the exact final numbers on the tax forms yet, but you should have a reasonably close idea of what is ultimately going to be populated in this column and what your 2025 tax return is ultimately approximately going to look like. Let's think about that for the moment from kind of a reverse point of view. If you have your 2025 column populated right now with what you think your current estimates are, and then a few weeks from now you get all your tax forms from your brokers and your employers and so on, and it turns out that you are way off in your estimate from today going out to a few weeks from now when you have your final numbers, then I would argue that you need to put in a little bit more effort and diligence into figuring out what your 2025 estimate is going to be. And the more proficient that you become at projecting your numbers, in particular for years that are already closed, then the more confidence I would have in your projections for 2026 and beyond. Okay, now what if you fill out the Safe Harbor Method calculator and discover that you're underpaid in some combination of Q1, Q2, and Q3? In such a situation, the calculator would look something like this. Right here on this final line of the calculator, it says quarterly under or overpayment. Note that underpayments are positive numbers and overpayments are negative numbers on this row. So for example, this would indicate that this individual is underpaid by $1,977 in Q1. They are cumulatively underpaid through Q2 to the tune of $7,882. They are cumulatively underpaid through Q3 to the tune of $8,266. And then right over here, because January the 15th has not passed yet as of the making of this video, in other words, we're trying to figure out what to pay on January the 15th, this would indicate that we cumulatively owe $16,651 in this example. In other words, if this individual was to make a payment of $16,651, they would catch themselves up to where they need to be on a cumulative basis, and by doing that, they would stop the interest and penalties on these first 3 quarters from continuing to accrue through the date of the filing of their tax return. Let's make sure that was clear. If you have an underpayment in Q1, then interest and penalties are accruing on that until the date when you pay this off. In this example, that amount was not paid off. In fact, it continued to accrue into Q2, and there was an additional balance due in Q2 that wasn't paid, and therefore we have another balance that has started to accrue interest and penalties in Q2 and will continue until you pay it off. And then coming over here to Q3, we can see that the cumulative balance is continuing to grow, and therefore there is an additional amount that is accruing interest and penalties starting in Q3 and going out until the time of payment. And so therefore in Q4, if you were to make this cumulative estimated payment, it would cut off all interest and penalties from continuing to accrue. However, you would still be dinged right here. You have this payment outstanding for 1, 2, 3 quarters. You would be dinged here because this payment is outstanding for 1, 2 quarters. And you would be dinged here because this payment is outstanding for 1 quarter. So what is your best course of action in this situation? Should you go to the annualized income installment method calculator, which by the way is also included with the personal tax planning template program, and see if by using the annualized income installment method you can reduce reduce your underpayments. Now this, by the way, is an expert level pop quiz question, which will separate the apprentice level nerds from the true kings and queens. And the answer to this question is no, not with the Q4 payment calculation. Okay, now why is that? Why does the annualized income installment method do nothing for you regarding the Q4 payment specifically? Well, let's think about that. What does the annualized income installment method actually do? And the answer is that it shifts income around between the quarters. More specifically, it shifts your income out of the pro rata method, i.e. the IRS default method, and into the quarters when the income actually occurred. Here's a simple conceptual example. Right here under the pro rata method, which is again the default method for the IRS, your income would be treated as occurring on a pro rata basis. In other words, it would be deemed to occur evenly throughout the year. So you can see right here in this example, we have income of $10,000 occurring in all 4 of the quarters, and we have a grand total over here for the year of $40,000. Now, since your income is deemed to occur evenly throughout the quarters, then in turn the amount of estimated tax that you are determined to owe in each of the 4 quarters, that is going to be evenly distributed as well. So let's just assume estimated tax of $2,000 in each of the 4 quarters in this example, for a grand total of $8,000 for the year. Now going down here to the annualized income installment method, this is how we get out of the IRS default treatment and get our income to be treated as occurring when it actually occurred. So in this example, let's assume that in Q1 we had $5,000 of income, same thing in Q2, same thing in Q3, and then we had a busy 4th quarter for whatever reason and we had income of $25,000. Over here in the annual total, you can see that the income for the year is still $40,000. In the pro rata method, we had $10,000, $20,000, $30,000, $40,000. In the annualized income installment method, we have 5, 10, 15, and then plus another 25 gives us the same $40,000. This right here represents when the income actually came flowing in the door, but the IRS will treat it like this by default unless you elect the annualized income installment method to get them to treat it like this, like when it actually occurred. And so now you can see that in this example, if we reduce our income in the first 3 quarters, then we also reduce the amount of estimated tax that is going to be determined to be due. In this case, we would only owe $1,000 in each of the first 3 quarters, and then we would owe $5,000 in the final quarter for a grand total for the year of the same $8,000 that we saw up here. So to summarize that, the annualized income installment method doesn't change the total for the year. The method only shifts around how much is due in each quarter. In other words, the total estimate due for the year is the same between the safe harbor method and the annualized income installment method. Let's take another look at the results from the safe harbor method calculator that we discussed earlier. This safe harbor calculator result shows that this person is cumulatively underpaid by $16,651 for the year. So let's think about this very carefully. Put on those thinking caps. If we went in here and we reduced the amount of income in Q1, I agree that this amount right here would go down. The amount of tax due in the first place and the amount of underpayment, both of those would go down. If we reduce the amount of income allocated to Q2 right here, I agree this amount of estimate due in the first place as well as this underpayment will go down. And then finally in Q3, if we reduce this amount of income, I agree that this amount of estimated tax that was due in the first place and the underpayment will go down. However, if we reduce the amount of income in Q1 and Q2 and Q3, where does the difference go? Well, it goes right here into Q4. This number would go up by the same amount that these 3 went down in total, because again, the total for the entire year has to stay the same. Therefore, here is where it all comes together, and I want to make sure that you follow this. Even though these 3 will go down, this one right here in Q4 would stay the same. Do you follow that? Because all you're doing with the annualized income installment method is saying, I owe less over here, I owe less over here, I owe less over here, but everything that I owe less of, quote unquote, I now owe in Q4. Therefore, on a cumulative basis, the amount would be the same. The makeup, the underlying makeup of this $16,651 would be less related to the first 3 quarters and more related to Q4, but it would still be the same amount in total. And that is why the annualized income installment method doesn't help you with the Q4 payment. So again, just to summarize, even if this person plugged all of their numbers into the annualized income installment method calculator, it wouldn't change the cumulative amount due with the Q4 payment, and therefore this is going to be the cumulative catch-up payment due in Q4 regardless of whether the safe harbor method or the annualized income installment method was used. So the takeaway from that section that I want you to have is that the annualized income installment method calculator is only useful when calculating your Q1, Q2, and Q3 payments during the year, and then the actual election of the annualized income installment method will be made with the filing of your tax return. And by the way, we are in Q1 of 2026 right now as of the making of this video, so if you're considering or planning for Roth IRA conversions and or large capital gain realization this year, now is the perfect time to get started plugging your 2026 estimates, not your 2025 estimates, into the annualized income installment method calculator to get yourself started on the right foot for Q1 2026 estimates, which are going to be due April 15th, 2026. Perhaps stated a little bit more simply, if you screwed up the annualized income installment method in 2025, there is no better time to get yourself started on the right track for 2026 than right now. Don't wait till Q4 2026 and then figure out that you messed it up again. The best time to get your tax planning started for the year is right at the beginning of the year, and so I encourage all of you that are subject to estimated tax payments to consider doing that right now during tax season 2026. Now, for members of the Personal Tax Planning Template Program, you can find the Annualized Income Installment Method Calculator in the What's New section of the course. Just locate this Annualized Income Installment Method Calculator download, and there is also a line-by-line training video for the AIIM calculator. In addition, if you are still having trouble wrapping your head around the AIIM concept, then it's high time you jump into my No Dings Advanced Estimated Tax video training, where you will learn how to save your family hundreds, even thousands of dollars in interest and tax penalties, while simultaneously avoiding those pesky IRS notices that give everyone indigestion when they show up in your mailbox. Now, a few housekeeping items about the Personal Tax Planning Template. Some of you have noticed 2 specific tabs that have been removed from the 2026 V1 version of the calculator. In particular, the Estimated Taxes tab and the Annualized Income Installment Method tab. That is because those 2 tabs have been replaced with the 2 calculators that we've mentioned earlier in this video. The Estimated Tax tab is now called the Safe Harbor Method Calculator, and the AIIM tab is now called the AIIM Calculator, and both of these can be downloaded from the What's New section of the Personal Tax Planning Template course, as I mentioned earlier. Remember that projecting and minimizing your tax liability is a lifetime concept caused primarily by the existence of deferred tax items, which include most or all of your 401k and traditional IRA balances and unrealized gains on capital assets, combined with tax laws that allow you opportunities to minimize the tax on those items, including Roth IRA conversions for retirement accounts and step up in basis upon death for taxable accounts or other capital assets. On the other hand, estimated tax payments, which is what the Safe Harbor method and the Annualized Income Installment method are all about, are an annual concept. You ideally never want to be overpaid or underpaid. You want to be appropriately paid in on a quarterly basis in order to avoid underpayments, which lead to tax penalties and interest, and overpayments, which lead to opportunity cost in an environment where the risk-free rate of return on cash is in the 3 to 4% range. That's why these concepts are in separate sections of the Form 1040 tax return and are in separate sections within the personal tax planning template program. You can see right here in the taxes and credits section of Form 1040, which is on page 2 of the form, the personal tax planning template goes all the way down to this line right here, line 24. This is your total tax. But the safe harbor method and the annualized income installment method calculators work on this section right here, the payments and refundable credits, which you can see right here by the separation on the return is a different concept than calculating the total tax that you owe. And for that reason, we have separated out the personal tax planning template calculations, which can be projected out from today through life expectancy, versus the safe harbor and annualized income installment method calculations, which are really applicable only to the current year. So that's going to be it for today's 2026 tax season pre-launch video. Links to both the personal tax planning template program as well as the No Dings Advanced Estimated Taxes video training can be found in the description below this video. Thanks everybody for watching, and I will see you on Saturday, January the 17th for the official launch of the Number Crunch Nerds 2026 tax season.